Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to take a look at the dollar yen and highlight the 600 pip move to the downside that we've seen today. So why have we seen this huge move in the market? Well, we had a bit of a shock decision by the Bank of Japan at their recent policy meeting, and they said that the yield on the 10-year Japanese government bond could rise as high as 0.5% from a previous capped 0.25%. Now, the central bank was part of a program known as a yield curve control and has maintained a target range of around 0. And that's for the benchmark government bond yield since 2016, and they've used that as a tool to keep overall market interest rates low. So they've now switched their sentiment, basically. You know, this move could potentially now see interest rates rise for the first time since 2007. And they haven't said that interest rates are going anywhere, but this change in policy could maybe open the thinking that there may be an interest rate hike coming. And I mean, the market has seen the yen strengthen across the board significantly throughout the entire day. If I just go to the hourly time frame here, since the announcement, price has moved 640 pips to the downside just on dollar yen alone. If you go across and look at other markets such as the euro yen, Aussie yen, other markets involving the yen, you can see that the yen has also strengthened quite significantly. And I was looking at the dollar yen pair because we were discussing previously about a potential move up to 139 as price consolidated. That didn't happen. Instead, we stayed below the 139 handle. Instead, we kind of rejected the 138 handle just below, and we also rejected this daily trend line resistance level. And you can see nice rejection, and now we're back down to the 131. So what's going to happen next for the yen? I think this is going to be a point now where we're going to see the yen strengthen quite significantly now that the Bank of Japan have started to kind of change or shift their sentiment. It could give investors a little bit of a scare that we could see yen strengthen further. Now, if that's the case, how can we look for opportunities? I think it's going to be one of those where you want to be looking for shallow pullbacks in the market. You know, maybe after a move like we've seen today, the markets may calm for a couple of days, maybe heading back towards this trend line resistance before heading lower again. I think what you're going to need to look for, though, if you are going to look to trade this market in particular, is look for price to come back into previous areas of resistance, maybe back down towards the 134 handle, this low previously formed back through here, or you might want to consider trading below the 131, which opens the sort of floodgate for dollar yen to head down to that 124 handle next, especially for dollar yen in particular. 124 would be a significant move, because if we just go and take a look at the weekly time frame, you can see that 124, I'll just zoom out, with the significant highs that formed back in 2015. So that would be a significant move down. And if anything, if I actually just bring in a Fibonacci tool and I go from the swing low to the swing high, you can see that's over a 50% move of the sort of rally that we had from 2021 when we just completely started to push to the upside there. So that's quite a significant thing in the market as well, breaking below that 50% retracement of this overall move and heading towards that sort of 124 handle. So it's definitely going to be interesting watching the Japanese yen. If you are going to be watching it, I'd look for those short-term pullback opportunities, but this market could be the one just to take off now, considering it being such a shock to investors. Hope you enjoyed this video update. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll catch you in the next video.